As global markets navigate increasingly turbulent waters with gold testing the historic $4 per ounce mark and Bitcoin retreating below $100, zero after a nearly 6% single-day correction. One of the most iconic debates in modern finance has resurged with renewed intensity. Physical gold versus Bitcoin as a store of value in times of crisis. This ideological clash, embodied by the opposing figures of Schiff and Saylor, transcends a simple asset comparison. It is, in fact, a collision of worldviews on money, sovereignty, technology, and the future of the financial system. Schiff, a classically trained economist and CEO of Euro-Pacific Capital, has been for decades an unwavering advocate of gold as the only true store of value. To him, the precious metal is scarce, durable, universally accepted, and above all entirely independent of computer systems, governments, or electrical grids. In his recent words, Bitcoin is testing $100,000 while gold tests $4,000. My guess is Bitcoin fails while gold advances. Schiff sees Bitcoin's current pullback not as an opportunity, but as the first sign of a speculative bubble bursting inflated by cheap liquidity, technological hype, and blind faith in algorithms. In his view, when economic chaos reaches its peak with bank failures, accelerated dollar devaluation, and a collapse of institutional trust, only gold will survive as a safe haven. On the opposite side of the ring stands Saylor, technological visionary and architect of Strategy Inc.'s Treasury strategy. Saylor doesn't just reject Schiff's view, he considers it obsolete in the face of the digital revolution. To him, Bitcoin is the digital gold of the new era, a natural evolution of monetary scarcity. Enhanced with superior properties, infinite divisibility, instant global portability, cryptographic verifiability, and immunity to physical confiscation. While Schiff sees fragility in Bitcoin's reliance on the internet and electricity, Saylor sees resilience in decentralization. No nation can ban Bitcoin the way the US confiscated gold in 1933, and even amid the recent dip, Strategy purchased an additional 8,178 BTC, $835 million, proving that for Saylor, volatility is an invitation, not a warning. The debate has gained fresh relevance precisely because both assets are being stress-tested simultaneously. Gold, traditionally the ultimate crisis hedge, is hitting real, inflation-adjusted highs driven by fears of fiat devaluation, geopolitical conflict, and central bank demand. Meanwhile, Bitcoin, despite its correction, maintains stronger fundamentals than ever: institutional adoption via ETFs, post-halving scarcity, professional custody infrastructure, and deep integration with traditional finance. The question now dividing analysts, investors, and YouTube creators is clear. In a deep bear market marked by global recession, widespread currency devaluation, and systemic loss of trust, which asset will better preserve purchasing power? Schiff's arguments are compelling through a historical lens. Gold has survived empires, world wars, and financial collapses for over 5,000 years. Saylor's case is persuasive through a technological lens. Bitcoin solves real-world problems gold cannot address in the 21st century, like instant cross-border value transfer, programmable finance, and financial inclusion for billions of unbanked people. But there is a crucial point many overlook. Gold and Bitcoin don't have to be mutually exclusive. For prudent investors, allocations can be complementary: gold as insurance against a total collapse of digital infrastructure, and Bitcoin as a bet on the transition to a new, decentralized digital monetary order. After all, the risk isn't just inflationary or deflationary, it's systemic and demands protection on multiple fronts. Yet the polarization between Schiff and Saylor reflects a deeper divide in the investment world: tradition versus innovation, physical versus digital, distrust versus faith in technology. While Schiff represents the conservative prudence of the Austrian school, Saylor embodies the disruptive boldness of the information age. On YouTube, this clash is turned into gold physical or digital, depending on the channel. Videos titled "Will Gold Destroy Bitcoin in 2025?" Is Saylor blind? Is Schiff right? Which asset to buy before the collapse are dominating recommendation feeds. Audiences, anxious for guidance in uncertain times, Seek not just data, but narratives that make sense in a world undergoing rapid transformation. In summary, the duel between Schiff and Saylor won't be settled by charts or short-term predictions, but by real-world events, global banking crisis, Western hyperinflation, or even a massive failure of digital infrastructure. Until then, gold remains the historical guardian of wealth, and Bitcoin the most ambitious experiment in sovereign money of the digital age. And perhaps in the economic chaos ahead, both will have their place not as rivals, but as two distinct forms of financial survival in an uncertain future.